Morning guys, welcome to the start of the week. Just a reminder to come and check out our website and see the opportunities that you can have here. We've got the education and our proprietary trading programs. It's different to funding challenges that you see out there, which have you trading on demo with very restrictive challenges, compared to our prop trading where you simply instantly start trading live funds. Yes, you have to work your way up, but that's what trading is earning a right to trade larger. Something we teach in our course. If you come over to the enroll page, you can simply join the program that suits you the best. Come and get some education or support in education. There is that financing available for Australian clients. If the cost is a little too high for you, but you can get started straight away. This week, pretty quiet ahead of us. A couple of talking heads midweek, Wednesday night Australian time or Wednesday morning in Europe and the US. And that's about it. This figure is not the one that everybody's watching it. Everybody's watching the core inflationary figure, which is not due out for another 3 or 4 weeks yet. Manufacturing PMI might be something, especially if it's a miss. I haven't put the forecast up yet, but last week we saw some PMIs out, and as you can see, there was not many green, mostly red. Even in the US flash manufacturing. Look, I'm not a huge fan of PMIs. To me, they are just a survey. I don't put a huge weighting on them because it is only a survey. It's not hard data. But the hard data we did see, last hard data from the US was the retail sales, which was also a miss. Suggesting that the consumers are starting to bite. As you can see here, the retail sales negative. So maybe that inflation is starting to hurt, and as other rate rises, as people stop spending. China coming out of COVID and getting back to work is a good news story. Elsewhere, we have bonds, as we've been talking about. The bonds would be coming back, retracing a little, and the trajectory for bonds, or the yield curve, shows that they're looking to peak in October this year, and then in February they're looking for, so you'd expect this to come back up here through to October, maybe a little bit higher, closer to maybe 4%, and then start to weaken again as the Fed tries to fight a recession, which they've induced by not getting control of inflation and having to raise rates aggressively. Commodities mostly weaker, particularly in the soft commodities, and I'll show you other charts about that. Commodity index, certainly the Bloomberg, this is all-time highs for the commodity index, and Bloomberg certainly showing a lot of weakness. Coal ticked up, as you would expect. Energy prices, as the northern hemisphere comes out of summer, and the shortages, particularly thanks to the Ukrainian war, start to bite as people try and store energy for the coming winter. I would expect energy to rally again in the last 6 months of this year. But other commodities are certainly weak across the board. One I'm thinking of the most is copper, which is a bellwether for economic activity. And we can see copper here is in free fall for the last 2 weeks. Has found perhaps a bit of a support level around here, where they've consolidated for a couple of months in post-COVID. That's that sort of wall of worry. Justin Manis's sentiment indicator, and certainly that looks almost identical to it. And we've had this disbelief, now euphoria, and we've had this disbelief of a bear market. So it'll be interesting to see if it can hold on to here or head back below $3 a ton, and yeah, be keeping an eye on that one. Other commodities, these are all metals and oil, but yeah, just the metal market or precious metal markets were pretty quiet, as was FX, to be honest, but we can certainly see soft commodities also getting weaker. Soybeans, sugar, cotton, coffee off, wheat, the big one, corn, oats, all showing weakness, which is good for your shopping list, and also perhaps a sign of a coming recession. Stocks though, stocks look at the coming recession and see it as an opportunity for cheap money. So stocks had an aggressive bid on Friday, with the idea of that cheap money coming in February rather than sort of late 2023. And so the stocks had a bit of a bid on it. It'll be interesting to see how that plays out over the coming days, whether or not this downtrend out of a bear market actually holds, or is this just a dead cat bounce and you look to get shorted. We'll keep you updated as that develops. Across in currency land, we have US dollar still just consolidating around here. I was expecting it to get lower, and I still see that that's potentially on the cards, and look for that opportunity, which would bring the Aussie dollar around the 71 cent level. Euro, we've got this inverse head and kind of inverse or shoulder pattern. Not quite the inverse, really, if you look at it as shoulder and shoulder, but we don't have the head. But this is a trend continuation pattern, and if it breaks that, then yeah, that's the way to trade that. But a bit of a resistance there, and then trying to get through that consolidation zone would be tough for the euro, especially with all the headwinds it has. Bit of a bid on the yen here for a couple of days last week. Maybe an opportunity to buy that, or by selling the yen. You just got to find which currency is going to be the strongest to do that. And we'll quickly go and have a quick look at the yen pairs once I've finished doing the majors. Pound, again, there's a few issues with the pound on the political scene, and economically they're highly exposed to what's going on in Europe, so I wouldn't be looking to a long-term buyer of the sterling. In fact, I'd look to fade it off that level if it gets there as the US dollar weakens. Similarly with the Kiwi, you've got lower lows, certainly in a downtrend. There's minor resistance here at 64, larger resistance at 65, and be looking to short it if there's selling opportunities arise in that zone. Loonie, this is the tricky one, and this one might be the opportunity. With energy prices sort of maybe turning higher again, you might see this come all the way back across this range. You would need a significantly weaker US dollar or a stronger loonie for that to happen. I don't really see that either. It might be, there's a minor support here where it's at around the 129 level. It's trying to find a turning point for it. Might be just this one. Oh, we might have to use a fib to find it. Maybe there off the 50 fib retracement. But the reason why I'm looking at the CAD is mainly because of oil prices and wanting to get into a short yen position. But you want to trade something that's strong against something that's weak. Okay, and if we're seeing a weaker yen, then which one is going to be the strong pair? And I don't see the Kiwi as being super strong. Certainly don't see the euro or the pound as being the opportunity to buy. US dollars certainly, but not yet. even though it looks like a potential buying opportunity. Aussie, I can't see that. You know, with copper coming off and iron ore also coming off, you know, Aussie's going to struggle. Don't like trading the Swiss. So that leaves ballooning as the opportunity to potentially get long a reasonably strong currency against a weaker yen, and that'll be what I'll be looking for this week. Okay, that's it for today, guys. We'll be back tomorrow with further analysis. Thanks.